Welcome to the Explainer. Sometimes a tiny little flicker on a stock chart way after the market closes can actually tell a massive story. Today, we're diving into one of those moments, a single stock surprise jump that reveals a multi-billion-dollar problem facing the entire world of finance.
So it all kicks off with something that seems pretty small, but it sent these huge ripples through the market. We're talking about the evening of January 6th. The trading day is over, everyone's gone home, and then this one number flashes on investors' screens, signaling that something really big was going on behind the scenes. And this was it. Plus 6%. After the closing bell, a major company's stock just shoots up by that much. Now, in the high-stakes world of finance, a jump like this, it doesn't just happen by accident. It's a signal. So, which company was it?
And that company? It was Strategy, the firm led by its pretty famous chairman, Michael Saylor. Now, you might know them for making these enormous bets on Bitcoin, and yeah, their stock price is often tied to the crypto market, but this specific spike? This wasn't just about the price of Bitcoin. Something else was going on. Right. This is the big question. What on earth could cause this kind of sudden burst of confidence from investors? Well, the answer involves a financial giant, a totally new class of company, and a decision that honestly could have moved billions and billions of dollars. To really get that 6% jump, we have to pull back the curtain and introduce this super powerful, behind-the-scenes player at the very heart of this story, the indexing giant, MSCI. Okay, so think of an MSCI index as one of the most exclusive clubs in the entire world for stocks. If you get on this best of list, it means you are on the radar of these massive investment funds. Billions of dollars in what's called passive investment capital just automatically flows into the companies on the list. So being included is a huge, huge deal. And being kicked out, oh, that would be a total catastrophe. And this is where this new term comes into play, a DATCO. This is what MSCI calls a company where more than half of its assets are digital assets, like Bitcoin. And Strategy, with its absolutely enormous Bitcoin treasury, is basically the poster child for this new category. And this new category, well, it created a huge problem for the old rule. And let me tell you, the stakes could not have been higher. MSCI was actually thinking about changing the rules to kick these DATCOs out, arguing they look more like investment funds than regular old companies. So for Strategy, the threat was crystal clear. Get booted from the index, and you lose access to billions of dollars in automatic passive investment. Just gone. So with billions of dollars hanging in the balance, you can bet the market was holding its breath, just waiting to see what MSCI would decide. And then, on January 6th, after the market closed, the decision finally came down. And there it is, a reprieve. MSCI announced it was basically hitting the pause button. They decided they would not be kicking DATCOs out, at least for now, and they pushed the whole review off until early 2026. For companies like Strategy, you can just imagine the massive sigh of relief. And the market? It reacted instantly. And look, there's our 6% jump for Strategy. But it wasn't just them. Other companies in a similar boat saw their stocks get a nice little bump, and even Bitcoin itself got a small lift. The threat was off the table, and confidence just came flooding right back in. So why the pause? Well, their reason really gets to the heart of the problem. In their own statement, MSCI basically admitted that the old definitions just don't really work anymore. I mean, is a company holding Bitcoin in its treasury the same thing as an investment fund? The lines have gotten really blurry, and they realize that they need a lot more time to figure out how to write new rules for these new kinds of assets. And that core problem of old rules just struggling to keep up with new realities, that's not just happening with crypto assets. It's a challenge facing the entire financial system. You've got an industry built on centuries of rules that's now facing these disruptive forces moving at the speed of light. And one of the biggest? The technology itself. So yeah, this struggle to adapt is a theme that's playing out everywhere you look. The very same firm, MSCI, that's trying to figure out how to classify a new asset, like Bitcoin, is also researching how its clients are dealing with a new technology that's rewriting pretty much every industry, artificial intelligence. Which brings us to a second really fascinating challenge the industry is facing. It's one that MSCI's own research has uncovered, a massive perception gap when it comes to adopting AI. So look at this chart. You could call it the AI paradox. You've got a huge majority of wealth managers, we're talking 68%, who say that AI is moderately to very important for their business. But then look at the other number.
only 27% believe their own industry is actually a leader in adopting it. So they know it's critical, but they feel like they're totally falling behind.
So what gives? Why the huge gap? Why does an industry that knows how important a new technology is feel like it's failing to lead the charge? Well, the answer, once again, comes down to trying to apply old yardsticks to completely new situations. As it turns out, different parts of the financial world have completely different goals for AI. Hedge funds, they're using AI for what's called alpha generation, basically trying to find brand new investment ideas to beat the market. But wealth managers, they have a different job. Their whole competitive edge is based on client relationships, so they need AI for client engagement, things like creating personalized proposals and strengthening those bonds. They aren't trying to build the same thing as a hedge fund, so it makes no sense to measure themselves against one. Okay, so let's tie these two stories together. On the one hand, you have this big struggle to classify new digital assets. And on the other, you have a struggle to figure out how to properly implement new AI technologies. You see, the DATCO dilemma and the AI paradox are really just two sides of the same coin. They both show an industry in a massive transition. The old rulebooks for what a company even is, or how you even measure success, are being challenged every single day. And for a sector that's built on precision and managing risk, all this uncertainty is a profound challenge. The real task here isn't just about adopting new things, it's about fundamentally rethinking the frameworks that have defined finance for decades. And that leaves us with one final, and I think critical question. In a world where new assets and technologies can totally reshape industries overnight, the biggest risk isn't just failing to adopt them. It's being governed by rules that are already out of date. So, who's going to be able to keep up? And what happens to those who can't? Thanks for digging into this with us.